So Tesla reported another record-breaking quarter, and this was not a surprise as we saw that deliveries had some amazing numbers. So after market close yesterday, Tesla gave us their Q3 earnings breakdown. And this report was so exciting in so many different ways, but as usual, the stock traded down. I'm not sure what the stock is going to do today, but in this video, I'll share a few things that stood out to me and give you a clear gameplay on how I plan to trade Tesla in the coming days. So let's start with top 5 things that were totally awesome in this earnings report. Number 1, and I have actually written as 1, 2, 3, 4. So number 1, Tesla's margins went up to 26.6% while the expectation was 24.2%. They literally surprised me with this number. I mean, with all the chip shortages, they still maintain to reduce cost and increase their margins. Just think about what they will be able to do in a perfect world. Number 2, right here, Model Y production to start in Austin and Berlin by the end of 2021. This is really bullish, and this will push Tesla way beyond anyone's reach in terms of volume EV production and will push Tesla's margins even further. Very bullish here. Now on number 3, Tesla to grow 50% year over year. Now Elon Musk has mentioned this with the deliveries or when the deliveries came out, but this is super exciting to see in a written statement in the earnings report. This means the number we are seeing right now will look like a joke in the coming quarters. Long-term goal is to produce 20 million cars per year. So for a second, think about this. So they are doing less than 1 million now, and in less than a decade, they will be able to produce 20 million. And very soon, they will have new batteries in production, which is what they need for volume production. So with all this, where do you think the stock will be in the next few years? Number 4, revenue was a miss. They missed on the revenue, but the reasoning behind it is very logical and actually bullish. So this is why they had lower revenue. Analysts expected 13.91 billion and they gave 13.75 billion. So 96% of their global deliveries came from Model 3 and Y, where the average selling price of these cars is lower, of course, as compared to Model S and X. Now, last year in 2020, Q3 of 2020, 89% of the revenue came from these cars, but this year it's 96%. So because the average selling price was down is the reason why we had lower revenue. But look at the bullish side. They have increased their margin even with the low average price cars. This is crazy. Imagine when they have all S and X produced in it, Cybertruck produced in it, what they will be able to do with the margins. Now, number 5, they have not realized any FSD revenue in the quarter or in this quarter in Q3. We know that FSD is rolling out to more and more folks every 2 weeks. So for Tesla to grant you FSD, just for those who doesn't know, they check your driving score. And by the way, my driving score is 93. I'm working hard on it to improve so I can also get FSD beta, but let's just say it's work in progress. This is another game changer idea, by the way, and will be huge for insurance world. Okay, so FSD is like a flag in a software. All they have to do is enable the flag and they can count on the revenue from all the cars. FSD will be massive in the coming quarters and they can really be valued like a tech company very soon. Now, of course, there were many things discussed or many points discussed, but these were my main 5 which I felt that stood out of the rest. Now let's take a look at some of the numbers and also the next quarter and the next year estimates by analyst. So this is the sheet I have for you. This is basically my Q3 tracking sheet along with the EPS graph, and also we are going to see what analysts were expecting and what they actually delivered. So now let's take a look at over here. So EPS was 1.67 was the estimate. They came out with 1.86. EPS gap was 1.24. They delivered 1.4. Revenue is where they fell short. 13.91 billion was expected. They delivered 13.76 billion. Net income 1.825 billion and they delivered 2 billion. EBITDA 2.946. They came out with 3.2 billion. That's crazy. Or this is where it gets really fun. Auto margin 28% is what they were expecting. They gave 30.5 and GAAP gross margin was 24.5 expected and they gave 26.6. This is really, really bullish. Now I'm going to show you a chart which is going to further prove to everyone that this company is going to rock in the next few years. Pay attention here. So the orange line that you see is the actual EPS and the blue line that you see is the estimated EPS. So right now, this is where we are right now. Actually, let me just mark it here. So this is where we are right now. So as you can see that they were expecting, of course, less and they delivered more when they came out with the EPS right here. As you can see, 1.86. Now, this EPS is higher than the next two prediction, the Q4 of 2021 and Q2 of 2022 by the analyst right here. So this is what analyst was predicting, of course, before the quarter. Actually, I'm going to draw a better line. So this is what analysts were predicting right here, and they came out and they actually delivered more than what the analysts were predicting for Q4 and Q2 of 2022. And I'm sure analysts is going to come back and they're going to revise their estimate because they had no idea that Tesla is going to do that. Now what I have done for the next image right here, this image I'm talking about now, I'm going to enlarge it. So I have taken the rest of the remaining quarters, so I'm only counting Q3 of each year. I'm not counting Q2 or Q1 or Q4. So this image is only for Q3. Pay attention to this. We are right now here. Okay, this is where we are, Q3 of 2021. This is what they're doing. Take a look. Q3 of 2022, Q3 of 2023 is moderate gain. It's gaining, but it's not like super high. But look at this. In Q3 of 2024, this is 24 right here. Look at their EPS expectation, over 8.0. This is insane. Look at the growth that they're going to have from Q3 of 2023 to Q4 of 2024. This is where the S curve will actually come into play, and they are going to go up like crazy. And this is where we are going to print big time for Tesla because their volume will be really high. All the factories will be able to produce the max capacity, and they will be volume producing all their cars. This is really exciting of what's going on in Q3 of 2024. So now let's take a look at the chart. So after hours, of course, as I mentioned before in my earlier videos, when the earnings came out, Tesla dropped. And we'll see how the stock opens today, but this is what I plan on doing. So as soon as the earnings came out, the stock went up to 875.40, as you can see over here, just because the EPS they saw, they're like, oh my goodness, Tesla broke the EPS 1.86. Wow, revenue, okay, the margin is 30.5 or 26.6. They started to go up, and then it came down all the way here. And then since then, it has traded lower all the way. And then when I'm recording or when I shot this video, it was past 8 p.m. It's 851.59. So this is where the stock closed. Now, what we have seen in the past, the stock has traded close to about 5% down after the earnings. If it's going down, it's about 5%, 4 to 5%. I would expect the same kind of price action today when you're watching this video. I have no idea. The stock can very well open and go in green, but I could see the stock as some softness because they did not meet the revenue expectation, and also there are a lot of profit takers that's going to come in. RSI is also looking at oversold right here, as you can see, and we are going to see what the chart says tomorrow. But this is what I plan on doing. So tomorrow I will plan on selling 10 750 cash covered puts for this Friday, just a day after. And I will collect quick 1 to 2 grand of premium by selling these puts. Very expensive, very high collateral I have to put. 750K I'm putting just for like grand or 1500. But this is very safe. Tesla, if it drops 5%, I can easily get double this. And of course, I will not be assigned the shares because Tesla is not coming to $750. If it does, oh well, I will own 1,000 more shares of Tesla. I'm okay with that. But I know it's not going to happen. I have done it many times. And if the Tesla dropped further, because I'm not going to sell it right at open, I usually monitor and see what the price is doing, and then I sell it. And if it's Tesla drops even further, I will go down and maybe sell it for 700 to be on the safe side if I don't want to own the shares. Then the bigger or the longer term gain, what I'm looking for is what I have showed you before, where I sell the puts and I buy the calls. And this is what I'm thinking. These are the two plays I'm thinking. I will be selling 10 cash covered puts on Tesla for 750 strike for March 2022, and then I will be buying 5 $900 call for Tesla for March 2022. This is the game. This is the first play I plan on doing. The second one is what I told you before in my previous video, was May 2022, $750 put and $780 call. It all depends on which of these two. I'm only going to execute one. Which of these two is going to give me maximum return on my money? I like to make at least 20 to 30% return. If I'm putting a collateral that big, I need to get back at least 20 to 30% or return on it. And then it makes sense for me to kind of make this or do this play. Now, I'm not going to wait for it to expire. As soon as in the next rally, I will get out and I will make what I can. Again, 20 to 30% is what I look to make from these bets. This is what I plan on doing today if the Tesla stock price goes down. If it goes up, I'm going to sit on the sideline because we have a lot of earnings coming up. Next few weeks will be choppy because we are going to see Google, we are going to see Amazon, we are going to see many more companies report the earnings in the next few weeks, and we are going to see some choppy waters here. We don't know what to expect. Facebook is also coming, and there's all these big companies are reporting in the next few weeks. So this is one of the most insane growth stories we will ever see, and I cannot be more excited to see this unfold in front of us and also be a part of this. Also, from the credit perspective, Tesla reduced their debt by $1.5 billion with $1.3 billion of free cash sitting in their account. This is amazing what they are doing internally and how they're executing. And just to be transparent, I take 50% of my winning and put it in Tesla. From any stock that I play, if I win, I take 50% of that and put it in Tesla. And I cannot wait for Tesla to drop more today. Please don't hate me for it, but I want these red days so I can get more. I made a video on Tesla and hidden trillions. I think it'll come true very soon. I'll link it up here, so do check it out. As always, thank you for joining me, and it's absolute pleasure to share all of this with you. Until next time, you all have a sparkling day.